do everything that the secondary market can do. So we can do not only portfolio lending, which is our in-house programs. We can also do secondary markets. So anything Freddie Mac or Fannie Mae can do, we can do. So we can do 80-20 on a first. We can do FHA, we can do USDA, we can do VA, any of those programs we have, right? So that's not necessarily niche. But what we do have that is more niche are our construction to perm programs, which may or may not be beneficial for you. But our land programs, that's a huge one for us, right? So when you have borrowers that are in need of vacant land, whether it's residential lot or if it is agriculture or large acreage, we can do that too. There are different parameters for each of those. For example, the land lot loans are always going to be 25% down. Our other undeveloped lots and farm ranch acreage is going to be up to 50. And I want to break that down a little bit just because on those, what makes land developed for us might be different for someone, for you or as a realtor. So just to break that down a little bit, our version of developed means it has a water source, a utility pole, a driveway, a fence, any of those items would make it developed for us. So typically it is a lot block or it is developed land. So they can get by with 25% down. But if it is truly, there's nothing, it's going to be 50%. However, if there's an ag exemption, we'll do 20, right, with everybody else. So just, the distinction on those. But our residential lot loans are very popular. Also, again, the construction, not too sure how much construction y'all see, but we can do a one-time close. And that is where the borrower either owns the land or if they're wanting to buy the land in conjunction with the construction, we can do either or. If they need to just secure the land and come back and do the construction, we'll do that too. We also have investment programs. We just added that to our repertoire a few months back. So we had removed it during COVID along with everyone else, and we just now kind of brought that back on the secondary market. So we can do investment lending. It is 25% down. So just if you're aware of that, and it cannot be in a business name. So if it is in a business name, that is something that I will refer back to Jose Oxy and Cheryl, and that is something they could do. But on the residential side, if they're wanting to keep it on that side, I'm not able to do that. Right? It would have to be taken out of the business name completely. And then, we could come in and handle it that way.
It's a huge part is a 30-year amortization.
It's a 30-year amortization. That is correct. So that's the other piece. If they want something shorter term, you guys are not going to care about that piece. But if they're wanting to do a 15 or a 10-year, we're going to bring that back in-house. So that investment program, it is only available on a 30-year. Okay, but there's no prepayment penalty. So they can always, pay it off sooner, right? So that's a new big one. A couple of the down payment programs I wanted to highlight because I just did a couple of them. We brought them up last year. We have one for my FHA. So any of the FHA borrowers that are eligible, it's called Down Payment Within Reach. It's a loan program that it offers a 3.5% second lien to cover the 3.5% down payment. So that's a program that could be utilized. There are some caveats in that. And I do have something that I can send y'all if you're interested in more of the nuts and bolts. Some realtors just say, I don't care, just here you go. But I like to break down what the caveats are because you send them to me and all of a sudden the caveat comes up right away. And that's something that maybe you could have shared with them right from the get, right? So I am planning on sending that to y'all as soon as I can get your email addresses so that you'll kind of have just the nuts and bolts of those programs. And that was what I was going to try to pull up for you, but I'm having difficulty. If I can get it done before the end of the day, I was going to actually send it an email because I have it as such. But being that I'm just having trouble bringing this up, I could do it all at the same time. So maybe when we're finished, I can work on doing that and getting that to everybody. Okay. But that is a second lien that will allow them to have down payment and closing costs towards that first mortgage. We also have a power purchase program that's available on conventional loans. That is going to be a grant and that is going to be 2% towards down payment or closing cost, and the borrower needs to come in with the 1%. So that's a great program too. But again, there's some caveats that go with that. So I'll be happy to share that information. Those are just a couple of things that I think are great for y'all to know in terms of nichiness. And then the other things are some of the benefits from using some of our portfolio programs, for example, the land lot loans. We have flexible mitigations. What that means is if they're working with us in-house, mitigations mean I can get around debt to income or something like that, depending on credit score. That's what we use for mitigation, and assets. So maybe somebody has the assets, but they're locked up somehow. Well, I can still utilize those for mitigation, depending on the circumstances. So mitigation starts with us at 720. So at 720, I can go up to, say, 47% debt to income. If they have that 720 and assets, which I believe reserve requirements for us is 3 months, I can go up to 50% debt to income on my portfolio program. So bringing things in-house, I have things I can do that I can't do in the secondary market. One of the other things is asset dissipation. A lot more banks are doing that now, but asset depletion, again, allows us to utilize someone that may have assets and maybe don't want to use those assets for the program or can't for whatever reason. We don't liquidate them. We just have to show that they have them. And then we have a process by which we can give them income based on those assets. That's huge for us. That's for those people that, somebody that maybe their income, we can only validate, and it puts them at, let's say, 43% debt to income. But they have a Edward Jones account that's maybe in a trust. So they're not wanting to utilize those funds or take out any funds, or maybe there's somebody else on the trust. We can use a percentage of those funds. Typically, for example, if it's an investment account, it's going to be 75% we will utilize. And there's a calculation that we'll put it through. Then we use a 10-year treasury rate and it spits out a number. Well, that could take them from 43% debt to income down to 38 or whatever it is. They're at 51, but we've got to get them down to 49. So that's something where asset depletion can work. I have people that it's too hard to get the income cash flowed, but they have $2 million, for example. And again, they don't want to use those funds. I haven't validated any income. We used all asset depletion. So it helps people. It can help anybody. It can help somebody with Social Security. Maybe they're on limited income, but again, they have assets for whatever reason that they can't utilize. We can help them in that way. I use asset depletion a lot.
Would you count home equity? Is it one of the assets?
No, it has to be. And when I say liquid, I don't mean liquid, but it has to be money. It has to be
cash equivalent.
Yeah. CD, investments, stocks, bonds, even life insurance can count if it is cash value.
Crypto?
Haven't gotten there yet. It's been asked. So not there yet. Yes, absolutely. Retirement accounts are another one that are going to be cut back to 75. If they have liquid assets, we give them 100% value for those funds. It's only when it's anything other that we cut it back. So asset depletion is a big one that I think is underutilized, huh?
Well, you need to know where the cash comes from. Like, well, the cash has to be sourced if it's cash
yes.
in an account.
If it's cash in an account, it's seasoning of 2 months.
All
right. So I mean, that may or may not be something that comes up, but for a lot of my high value customers, it is, for whatever reason, if whether they're self-employed and we can't validate if they've got assets, or, again, they're on Social Security, maybe they're taking distributions, right, and can't do anything else. That's a situation where we can really help with that. Do you have any questions on asset dissipation? Because I just love that as a benefit, of being able to help out. And the mitigations. Let's not underestimate mitigation, because, there are times when the debt to income is over, but they've got great credit. Well, can we use that to their benefit? Again, none of this applies to secondary market, just to in-house. Bank statement program. You probably have lenders that have that, but we do have a great bank statement program for individuals that may qualify for it. It's typically 12 to 24 months of bank statements. And Deep Haven is who we are using for that. And they have been good and responsive. I've gotten response back in 24 hours on each deal I sent. So, pretty much up front if it's going to work or not. So that's just another thing that we like to promote. So for me, Prosperity Bank is sort of your your option, if nothing else is available, it's worth it to give me a call, shoot me an email. Hey, what do you think about this scenario? Do you think it's going to fit anything that you have? I'm always willing to share more information than necessary, right? But not everybody wants that. So that's sort of, I think, one of the specialties I have is I'm good at explaining things. I'm great with first-time home buyers. I can determine within 5 minutes the level of, education that they might need, or maybe somebody that really doesn't need a whole bunch of education. It's not their first rodeo, right? That's another type of customer. So I just kind of wanted to go through those things again, let you guys know that we're here. And we want to help. We want to help as many customers as we can, or borrowers that we can, get into homes, and answer any questions you might have, and then give Jose and Cheryl an opportunity to speak on the commercial business side if you would like.
Of course, we'd like Jose and Cheryl to speak on the commercial side. I don't have any questions.
Yeah.
And there's no questions on Zoom. We told them to put them in the chat.
Gotcha. Gotcha. I can get way specific, but I'm just not sure how much time it is. And while you guys are doing that, I'm going to try to pull these up and see if I can share that. But please go ahead.
Actually, before you do that,
Mhm.
I'm going to kind of put some questions out there because I got to thank Kelly and Cheryl for being available. They're super busy. They made time, and I was waiting. I think Michael's going to say, "Hey, the weather's going to be too rough. We're going to have to cancel." No one cancel. We all showed up, and that's part of what we do. Storms, weather. We try to get open for our customers
Show up.
because we need to. I know that's what you do, Michael. Your customers are waiting, but I kind of like to hear from you all. From what you heard from Kelly, and look, we want to be open here. What can we do, or what can we clarify to earn more opportunities with you, with your clients? You're out there right now. You've seen the last year, 12 months, 6 months. You see the temperature that's out there. And keep in mind, we're not just talking about purchases, right? I know you have clients that are existing homeowners. That's a big piece of Houston that I think a lot of us as lenders forget about. There are a lot of homeowners, but they don't always know the options they have. You mentioned equity, right? They don't always know that. But from the purchase side first, is there anything that you're hearing us or that you've seen over the last few months that you'd like to kind of ask how we treat, how we handle, whether it's underwriting, whether it's product type or property type? I'd love to hear some of that from you because we got an expert here with us here. Yes, please. It will help us.
Now with the interest, with the insurance premiums, how is that impacting? And what are some of the workarounds or are there any workarounds that pricing people out?
I don't have a workaround, but I will say that 2 years ago, we went from a 5% deductible to a 2%. We really cut back on that. And I believe that we expanded that again. So that's helpful, greatly. But unfortunately, the insurance being what it is, they're still going to have to qualify with that payment. But I think that it has been helpful to increase that deductible.
And I think for your team, that's such a great question today. That and taxes.
Yeah.
But those deductibles, it's never too early to mention that to your clients that, hey, this is kind of a puzzle. However you present the transaction, but great, we found the property, worked in the contract, everybody's happy, we found financing. All right, now you got to find your insurance, and you got to work
get on
it,
and
understand the deductible. So whoever their partner is on the insurance side, that they're helping them. Look, Kelly will give the parameters, 2% max deductibles. There is some flexibility there, though. But engaging with them early is going to be so important, and reminding them, hey guys, now the transaction is done. Every year you have to do this, so don't let up. Your agent has to work for you just as hard as you work for them. They have to work for you to try and save you money somehow, because that could sometimes be, unfortunately, we're hearing that a lot right now. I can't afford this.
It's a deal breaker.
$5,000 premiums on insurance, and we're not talking about properties that are on the coast, not in Galveston. This is the Houston area on some of these properties. So it's important that they're recognizing that. So thank you for bringing that up. Huge thing on the insurance deductibles.
And to shop around. I know you
That's
guys are
a big thing.
counseling, your people to do that, but because it's unregulated the way that it is, they really do. They need to get 2 or 3 quotes. And I have a great partner when somebody just says, I have no idea, or they're overwhelmed. Hey, I have people that I go ahead and get the quotes, or compare it to who you have at Geico. But yeah, that's a really important point. And then the taxes. On that note, I know y'all talk to your borrowers, hey, this is going to be a 3.4% tax area versus an area that might be 2.3. Is that really something that you are, I guess, upfront before you're even looking at properties,
No,
talking about?
not before we look at it. I don't usually go
When
for
does
it.
that come into the conversation?
Yeah, I guess that would be a better question. When do you talk about that piece?
Usually when we let the lender know, hey,
Okay.
we have a property that we like, and then we pass it on, and then they'll run the numbers.
Okay.
And tell them, okay, well, the taxes are this high, so it's gonna put your monthly notes here, and then
That's when we determine, okay, we might need to either adjust our sales price or we got to look in an area that maybe has a lower price point. Okay.
I have a question, Kelly. When you all do your loan estimate, what assumptions are y'all making
2.4%.
for taxes?
That's the base. Now, if I am looking and I see that the area is in Katy, I'm already going to go ahead and bump that up. But that's our base. So, and I say that to say, I think then it is up to the loan officer to kind of say, all right, I will look up HAR, right? Especially if I know the address, right? But if I don't know the address and I kind of do, that's why I was acting, you generally know it's going to be somewhere in the, well, although Houston does not help because it could still be all over the map. But I do try to get a little more detailed on that piece because it can make a big difference. But that's the assumption that we use, 2.4% of the sales price.
And then 2% insurance.
No, that one's a little bit different. We actually have a calculator that we will put in a sales price and it will kind of give us an idea of what ours is. And it's high. It's higher than I think what is normally, but I think that's for safety precautionary measures. Yeah. So the other thing I wanted, and this came up just this morning, as a matter of fact, but pre-qualification versus a pre-approval, right? How are we doing a pre-qual? Because really, a pre-qualification is as good as the piece of paper it's on, right? How diligent are we being about making sure that we have accurate and complete information? I do income analysis on all my borrowers, unless they tell me they're wage earners. Like I am salaried or this is how I make per hour. And then we will break that down. If anybody tells me they're self-employed or they tell me that a lot of their income is bonus or commission, I'm asking for documentation. Now, do most lenders do that up front for pre-approval or pre-qualification? No, but that's another difference that I think I make. I'm going to, because I already know you don't know how much you make when you're self-employed. You don't. You'd like to think that you do. The reality is the lenders are going to look at it differently, right? Or bonus and commission. Since we look at that differently, I kind of want to see, get me the pay stub. Let me see how much you've made year to date. That's important. So I believe I have a very high percentage of pull through on my pre-approvals because I've done that footwork up front. So I just wanted to mention that I believe that our pre-approvals are very solid.
So when you say pre-approval, that's saying that you're looking at bank statements, tax returns, and you're verifying assets.
Correct. That is correct.
I think that's what we expect, no more.
Okay.
Can you talk to kind of building on this? What if, say, for example, set your client, what does the client expect from you right away? Like your initial communication will include a needs list, for example, to get to the point of the documentation. How does that come about?
On a pre-qualification, I do not send a needs list unless it's one of those things, right? If they have a different type of income. And then yes, they're going to get a needs list for the income. Primarily, I do a thorough interview. So they're going to complete the application, whether it's online, right? If they do it with me, they're going to expect to be 45 minutes to an hour because I'm really going to ask all those questions. And sometimes they're like, I just wanted a quick pre-approval. I can give you a quick pre-approval, but is that going to be a valid pre-approval, right? So initially, it's just going to be a thorough interview. And then depending on what they tell me about their income, or if they have 5 properties, again, I'm going to go ahead and just ask for the tax returns if they're filing a Schedule E. And then they will get the needs list, which is, bank statements, 2 months bank statements, a month of pay stubs, W-2s, and tax returns.
And our
Right now, we're
options-
not asking for 24, not yet, just W-2s, but just know that. Say again.
Our options for clients to apply are, what are they?
Online, or we can do it right over the phone. Or they can come see me, but I mean, typically over the phone, seems like people will share anything. I'm still surprised.
So they can just call you or we call you.
They can call me directly, or you can do a three-way. Yep, that's more comfortable for y'all. I try to make myself as accommodating as possible for whoever is either sending me the lead or the whatever's most comfortable for the borrower. I really do try to make that part easy. The hardest thing is to know where you stand. After that, it's easy.
Yeah.
Kelly,
Right.
am I overstepping here and saying, to your point of flexibility? There's some relationship we have with clients with, I'm not doing anything without Michael being there. I need him to be part of the whole conversation, to where I don't want Michael there with me. I'm gonna handle everything myself. He's handling this part. We're flexible either or.
Yes, I am. I absolutely am. My only goal is to get you guys as much information as you need to help you get more clients.
Yeah.
And to help the bank get more clients, right? Helping us all do the same. So that is my number one goal. And if anything I can do to help you all with that, I can. And again, questions are welcome.
I'll ask the team another question. Anything, again, I go back over the last year, 6 months, of your partner lenders that you're working with. Man, I wish I could find a lender that doesn't do
Yeah.
it this way. I wish this wouldn't keep coming up. I'd love to hear that too. How do we handle that? Anything come to mind?
I actually want to let Shay, did you hear his question? All right, say it again. 'Cause
Anything
Shay's
that's
had
come
a-
up over the last year or so with your partner lenders that you wish, you know what, I wish this wouldn't keep happening, this item or this request or this process, the way it's handled. I wish I could find a lender that doesn't do this, or how does someone else handle this like Prosperity? How would we handle? Because we don't want to keep repeating things that are keeping us from doing business. And maybe at times it's clarifying why a certain process is done. So I'd love to hear if you had your wish list, make this go away, if you will.
The whole pre-approval process.
Would you say just burn it?
Burn it.
Burn it down.
I
like
know,
that.
y'all, let's be honest. It's brutal. I mean, it really can be. I mean, we feel it too. And not only that, I mean, I get emails daily because we have to make a credit decision, which means to the underwriter, it's been conditionally approved within 30 days. And if we don't, we have to send them what's called a notice of incomplete. But up until those 30 days, I'm getting emails after day 5 or 6 on these files. So they're not the only ones being harassed, if I can put it that way. So, but we're on it. And that's why, because we need to stay compliant, right? So at least they're not gonna get forgotten. And sometimes that happens too, right? They have to be approved or told that they're not approved so that you guys will have your information in a timely fashion.
So do you all, because we do meet a lot of people that they're not quite ready, so you just gotta kind of continue to guide them to the promised land. Do y'all have like a pipeline or a process of like staying engaged with people that didn't quite make the first go round?
So we do have within our CRM system, there's a follow-up program. It lasts for a certain amount of time. Beyond that, it is up to us to, if somebody's really serious, yes, I can definitely put them on my calendar for a reoccurring. And I have many of those, right, to follow up. And through Total Expert, I believe if somebody's declined, their journey ends. But as long as they're in pre-approval status or approved, they will continue to get what we call journey updates that kind of keep in touch with them. But it's not going to reach out to them in any way. It's just communication. That's really more up to me.
It's like an email.
Yep. Now, I have some realtors that do ask me, say, hey, can you follow up with these customers because I just don't have the capacity. I can do that, right? It's not for everyone, but if there are borrowers that we know they're going to pop one day, right?
Yeah.
And I have no problem doing that.
Okay.
Kelly, I'll ask you just one from my side for you to us. One or two things that you've seen, again, over the last 6 months that are causing some of the denials on the files, that kind of recurring type items that we just kind of highlight to put out there that maybe we can kind of be on the lookout for. How do we help clients that may fall into this type of situation? I know the one that always comes up, or at least it seems like never leaves, the debt to income.
Yeah, but that's sort of a standard one. I think one of the things that's come up a lot is undisclosed debt. So even through my thorough interview, I will find people that later on, because we do a fraud search, which brings up undisclosed real estate debt, and they own land or they own other property, and you ask the borrower, but we asked you in your application but they're like, oh, well, it's not mine, it's half my brother's, or it's just land. Land is still property. We all know that, right? Okay, so that comes up the most, believe it or not. Undisclosed debt, whether it's I own it with my dad, I own it with my sister, it's not really mine, I don't pay it, I'm a co-signer, it all counts.
Yeah.
Right. So that's it. Debt to income is going to come up just because it just does, right? Maybe they're not making the bonus that they said they made, again, which is why we, wanted to get that up front. That could come up. Oh yeah, I don't get that commission anymore. Those kind of things. But those are things that, are normal things. The thing that is out of the norm is that undisclosed debt.
This will be my last one. Oh, please.
No, I'm just saying, you're saying that's happening a lot lately?
Yes. Mm-hmm. Mm-hmm.
On the credit side, how do you handle when the clients say, I look at my Credit Karma every day, my Credit Karma report, and it says I have 700 score.
Yeah.
How do you handle
So
that?
I tell them that while that is a valid credit score for certain types of debt, it is not the algorithm used for lenders. The lenders use a different type of credit pull. It is much more strict, obviously, because this is a larger transaction. And that the algorithms are different and much more strict. So what you're seeing is not what I'm going to see. Hopefully it's close, but not unusual for them to see that. I do also we have a new lender now or not a new lender, I'm sorry, but Covenant, is no longer HUD approved. So we are now utilizing
Fifth Ward.
Fifth.
I think you know the wrong Fifth Ward.
Covenant
Alliance.
Capital is no longer approved?
But we just found out recently. So we do have another program that I'm utilizing for individuals. Yes, that can kind of want to, maybe they're ready, but they need money with income, or I'm sorry, the assets or the credit. I'm finding that I've put 3 people now through, referred to them so that they can get on the path. So that's another way to keep in touch with maybe those that aren't ready right now.
Yeah.
I like putting them in a program where I feel like they can be managed and helped.
No, I agree with that. So you encourage people, like even if it's you have that conversation, even if we're having that conversation, we're both kind of having that conversation to steer them in that direction.
I do for the counseling.
Yeah.
Right. So I do. And I think it also keeps them engaged, because sometimes when you deny them, they get discouraged. They're not really wanting to do it anymore. Or they're like, well, I'll just try again in 6 months. Well, what are you going to do within the 6 months to help you get there? Right. So I try to be, upbeat with them. This is a decline for today only. That's it. Right. We can do things to improve this to get you to that level. And I know it can be done. And then I tell the same example of myself. Right. So I think that there's ways to keep people engaged, but that's one of them. Get them in with somebody that's going to keep them engaged.
Yeah, no, I'm definitely tracking with you on that. This is new information about Covenant. I knew Vera Lisa had left. Did she leave still?
I'm not sure about that. Vera Lisa.
She left,
Okay.
right?
Yeah.
No, I was just verifying that she did leave.
Yeah, no, she did. Yeah, we found that out as well.
Yeah.
Just for my piece to build on some of what Kelly presented, I printed out these pamphlets as well, and I'll share this with my email later. But one of the things we also need your help with, and I'm asking all of our partners in Houston when we're out and about, is check the box initiative. So this is from our community outreach area, Linda Everett, Natasha Livingston. They put this together. I can't take the credit for this, but the point of this is just reminding our clients when they're doing that application, it really makes a difference if they check those boxes. Too many times we're getting clients that are not wanting to disclose the questions of the demographic information. And we're just highlighting here the benefits of it, and it really does help. And it helps us be able to recognize where might we need to change things like our underwriting guidelines, right? Or we're not offering the type of products that the clients need for the type of properties they're looking for in our community. So just reminding them it's not going to be held against them. It helps. the bigger picture, and every application does matter. So help us help them. It's just a reminder. So
Good.
love to touch more
This is
on
my
that
first
with you.
time, A bank, pushing this initiative.
It's close to home. We see it too many times, talk a little bit about commercial options, and I'll let Cheryl, she wasn't asked to speak, but I'm gonna turn it over in a little bit.
Nice meeting you.
We have in-house products that stay with the bank, whether it's a big part of it is real estate, but C&I lending as well, you know, for those clients that are not looking for real estate needs.
When you say seeing that.
Commercial industrial,
Okay.
you know, non-real estate secured. We also offer great programs through our Small Business Administration area, our SBA. Primarily the two programs they offer are 504 programs and 7A programs. So we like to think we have options for most commercial clients depending on what they're looking for.
Yeah.
Typically, when you think about real estate, and I guess lending in general for us, there is a conservative tone to it. At times it may appear, but it's what brought success to the bank. You know, we thankfully our default areas on the commercial lending is really low compared to our peers. Part of that is there's some good injection in those transactions. So you're looking on real estate, preferably 25% on most projects, depending on what we're looking at, but for sure at minimum 20. Okay. But depending on what you're looking at, you know, whether it's owner occupied or non-owner occupied, one of the options too we have is investment properties, like Kelly mentioned. Our amortization only goes 15 years on those options. But whether it's needing funds for an airplane, needing funds for a ranch, and everything in between. So just to highlight, we have a lot of options on the commercial side, and 65 offices in the Houston area. Most of the offices have banking center presidents, so these are commercial lenders. So just invite your teams to come in and take a cup of coffee and let us talk to you a little bit about our options. Anything you'd like to highlight, Cheryl, that you might, or a niche of you?
On the commercial side, when we sit down and talk to customers, first of all, we're looking at the whole relationship. And the first thing that we do is sit down and we want the whole picture, just kind of like she was discussing with regard to the pre-approvals. So a lot of times you have a commercial customer, he sits down, he's a business owner, self-employed, whatever the situation is, and we're helping them. I mean, I will sit down and go through the financial statement, because a lot of the smaller, you know, businesses there's some S corps that are on their tax returns and they just don't have the accounting background or anything else to deal with it. We also can sit at that point and refer them if they're, you know, just needing something on the consumer side. We offer credit cards, we have business credit cards, we have all kinds of products to help support them, all the traditional bank products. And in turn, if they come in and just as Jose mentioned a moment ago, if they're looking for an investment property, they already have a house and they're just going to do their first time, you know, I want to buy a condo and I'm going to lease it out and I've found this property or whatever, you know, instantly we turn everything over to the residential folks. The other thing that's good is that we handle all of the, I mean, because we're portfolio, once we get a customer, we're there with them. They don't go away. It's not a transaction that we just do one and done and on to next.
Yeah.
We actually spend time with them. We want to be a part of their growth, because that's what sets us apart, is helping the community grow.
Yeah.
And we do I've done a lot of, personally in my area, I've done a lot in nonprofit. And when you do that, then it opens up to a whole lot of other retail. And we have a bunch. So it's a referral both ways too. Also with regard to realtors and real estate, people come in and they sit down and they talk about, well, yeah, I'm fixing to go through, we're the first ones to hear about the divorce. We're the first ones to hear about, you know, all kinds, somebody passing on. We deal with all kinds of different, from trust levels on down. We also, like with regard to the insurance that y'all were talking about, we have on the portfolio side and on the commercial side, we look at it, we're not gonna, you may have a $1 million plus piece of property, we're not gonna make you insure the dirt. So we can back that out based on the appraisal.
Oh, okay.
So there's a lot of different ways that we can, and there's just a lot of different things that we can up front help get everybody situated to where they need to be. If they need to make payments, the payments need to come through a sweep account from a brokerage,
Yeah.
or vice versa. If they're having stuff that they need to pay out on a regular basis. The commercial side, we handle all the headaches
All of
and
it,
things
right.
that go with it. And it's good because having done, doing all those different pieces of it, again, we were able to help them grow and help them get to where they need to be. And we can take someone that needs to buy, as he mentioned, the CNI side, you need a couple trucks or vehicles for a fleet. You need, a couple cars that have real estate signs on the side, whatever it is. Yeah. Whatever it is on that side. And sometimes we're not the best game in town. Just as we do with the sellable loans that are out there on the mortgage versus our portfolio loans, we have the same options with regard to like the vehicle loans. If you're out shopping, I can't tell you, we're not in the automobile business. We're not going to compete against the local dealerships and whatnot. But at the same token, we can help them get to where they need to be and get a pre-approval or an approval through a credit union or somewhere else. And we want to be their one-stop shop, but we also are aware of the fact that there are other products and things that are out there. And sometimes, customers will come in and their credit isn't what it needs to be. And we can then in turn have capital groups and other places that
You can refer them to,
we don't steer them, but we can actually
make them aware.
make them aware of it and what their other options are. And so our motto, period, is try to say yes instead of no in prosperity. And that's always been that.
And Cheryl, you introduced to, I think a big part for us is the value of the relationship. We're not just trying to be a transaction. And I know that at times that's not something that's looked at, but it really does matter. And that's why you've been with the bank how long, Kelly? Put you on the spot.
Prosperity?
Yeah.
6 years,
Yeah,
December,
and-
this
and
last
Cheryl,
December.
How long?
24.
Prosperity, well, I didn't know that.
I'm still in the
Prosperity.
teens. I'm going on about 18 right now. So,
Yeah.
I think we're
Been in the business
take
much
pride in
longer.
that. That they walk into many of our banking centers and they'll see the same individuals, especially the same management, and that matters, and that's what makes us different. So to Cheryl's point, we really look at the full relationship. We want to introduce the full services that we offer to the bank. From the commercial side, especially many deposit options that we have, how to leverage your financial situation, have a great trust area. Not a lot of that is talked about. On the investment side as well, we have an arm separate to the bank that offers that. So retirement, home, college, whatever it is, we really do have all the options as a full service institution. So, we just invite everyone to come in and get to know us, get to meet us. Cheryl's available for any of your clients on the commercial side, please.
So what locations do you all outside of?
I'm at the Westheimer location, which is just,
Not too far.
yeah,
Beltway, inside the Beltway, right?
inside the Beltway, but south of Boss,
Okay.
or not south, whatever it is, west. Wow.
Boss.
Yeah,
And
I'm directionally
I mean,
challenged.
I can find it.
She has a really nice
Yeah.
office too.
I'm everywhere,
Is
but
it-
I'm in the Woodlands specifically,
Exactly.
but I live in Cleveland. I'm everywhere, y'all. So
Okay.
just find me.
That's
That's
I have
what
a
we
question
do.
for y'all though, for realtors. so sorry. I'm not gonna say what I want to say, but I'm having a moment at the moment. Oh, got it. Areas. Sometimes I need realtors and I talk to realtors. I'm like, yeah, that's a little too far for me. I had that twice last week. Do you have specific areas that you like to work or you will take anyone anywhere? Do you feel more comfortable in a certain area? Like if I have a borrower that needs a realtor,
I'll go.
you'll travel? Okay.
Margaret said,
I'm gonna
"Send-
keep you
send
in
me."
mind.
Margaret said, send me.
Okay.
Yeah, we'll, and Margaret has the backing of, so we have Brooks and Davis, but then we also have our own personal team, Brooks and Davis signature.
Okay.
So her and Shay, they have more support than the other agents.
Okay.
To put her in a position to where she can.
And when you get a customer that just comes in and says, I'm just looking, which they all say that when they walk through the door, I'm just looking, I don't know where I want to look. At what point do you say, okay, we're gonna do a pre-approval? Is that?
Or is it like come back when you have a pre-approval?
I think that's a great question. So,
Yeah.
For us, a part of our sales process, we'll call it that. A part of our sales process, we call it engage, like the engage/formation part of our sales process. So if a person comes and says, I'm just looking, then there's some mechanisms that we employ to stay with them until they get comfortable enough to begin that process. We like to start everybody off with having a conversation with them. Like that's what we like to do. But from experience, a lot of people don't want to do that. They have their misconceptions. It's a lot of myths that you
Right.
So for us, it's a lot of education up front to help them get comfortable and trust us enough to then, hey, I need you to speak with, we at least need to get a look at the financial picture to see what the gaps are so we can start working on it. So we try to, personally with our team, we try to handle that part in the engage phase. So even if it's somebody that we know, hey, they're not gonna be buying something in a year. We know that they may have credit issues. We know that they may not have, we know it, but we wanna at least get a loan application done so we can see.
Exactly.
How far off are you?
Right.
Yeah.
And where you're at.
So we're intentional with approaching it that way. It's just getting the consumer to feel comfortable enough to do it.
Have you experienced any issues with the new potentially buyer paid fees? We just had one run in. It wasn't myself, it was somebody else.
No, I wouldn't say no. Just educate them.
Okay.
And usually the clients are okay.
Okay.
We just have to figure out how to work the numbers in if the seller isn't
Amenable to
that.
helping. Okay.
We just have to get with the lenders and just work those numbers in. But I wouldn't say it was an issue.
Okay.
I think everybody still wants the same thing, right?
Exactly.
Like the lender, the buyer's agent, the listing agent, the seller, the buyer, like everybody still wants the same thing. So making sure that we keep our focus on that helps us get around some of these nuances that regulation throws at us sometimes.
Okay.
But I haven't necessarily seen it. The people that are making the biggest deal about it are the other realtors. Like it's not the
Right.
sellers or consumers really. It's the
Okay.
the realtors making a big mess of it.
I think the issue they had with the bank is
On the
the underwriter
AJR.
was wanting to use it towards towards the IP, the maximum contribution. And truly, he won, the mortgage officer won. It really wasn't towards the 6%. It was a whole thing. But they ended up having to move it to another area in the city in order for it to count. So I just wondered if that was coming up regularly, if that was a one-off type of a situation. So,
Yeah, it's kind of one-off.
okay.
It's kind of one-off. The biggest challenge that we're finding right now is there's apprehension again. People are hearing about the insurance and what insurance is doing. People are hearing about the interest rates. So it's just kind of
Something else to have. Barrier.
Yep.
Even
It's
if a
okay.
mental one.
I think that's kind of industry wide because they say everybody anticipates that the rates are going to drop.
Yeah.
And then you hear that out on the street, and then
Yeah.
next thing you know, nobody wants to go until they see the rates drop.
Everybody.
It's
And
again
then
about the
they're like
education.
always waiting. Okay, well maybe it's gonna drop again.
Yeah, they keep waiting.
They want it to go
Yeah.
back to where.
But their rent rates keep going up.
Right.
Exactly.
Uh-huh.
You keep paying
Exactly.
more for rent.
It's
You know,
really
that
about the
lead,
education,
and there's
like you said.
articles, like I read in the Chronicle where it said,
Rate this better.
well, we're one of the most affordable rents. So kind of encouraging, hey, we're
Mhm.
still good.
Yeah.
Mhm.
Yep.
Yeah. So a lot of that, we're dealing with a lot of that.
Yeah, I'm doing a lot of educating too, and I try not to engage in the whole high interest rates. I do just like I did. This is normal. You know, I mean, this is more normal, right, than before. So, well, I really appreciate the time.
Oh, no,
I
absolutely.
really, really
And
do.
we got you recorded, so we'll get you up on our YouTube.
Oh,
channel.
gosh.
We appreciate
Oh,
it. I'm gonna,
gosh.
and before I do want to introduce something. I'm gonna leave with some flyers for Natasha Livingston, our outreach, one of our outreach coordinators. And when you go to the QR code, part of what we introduced is the empowerment series.
Okay.
That we're introducing. It's really geared to our business community, our nonprofits even, but churches. Just bottom line, a lot of good information here
Mhm.
that Natasha and her group can come out and introduce.
Yeah.
We'd love you to look at it, see if there's any of the modules, even for the team here.
Yeah,
Yes, we can be a partner. I know, Michael, you're a
Yeah.
big part of education.
Yeah, absolutely.
So if we can be a partner with that. And you know, one thing you mentioned, I don't know if this is a fit, and I'm not saying Kelly's gonna do this, but if it helps, this is a different time than 5 years ago, right? Different temperature out there when it
Right.
comes to houses and buying and selling. If you need a partner that, look, you have 3 or 4 clients that are on the hot button right now, you gotta get to, and you get that call that they're really just trying to gauge where they're at. If we can help with that call.
Yeah.
You know, if they get
Absolutely.
to Kelly, for example,
Mhm.
she's gonna give them accurate information. And sometimes if it means, you know what, I'm not the best fit for you, but these 2 or 3 may be options for you.
Yeah.
That folks that you know as well, sometimes that's what we do, right? That's the right thing to do,
Yeah.
is recognize we're not the best option for you. You have a better situation here. And they'll come back
Yeah.
because they'll remember Kelly was the one that ultimately got
That's
them
right.
there.
That's right.
But if we can help in that way as well, we'd be happy to do that as well. Because we also have another area, if Kelly's not available, our lead desk.
Mhm.
So there are mortgage associates there that can also facilitate some of those preliminary conversations. You know, they're not quite ready to go through you, not quite ready maybe to go through Kelly, still have questions.
And they need to be engaged.
And they need to be
Absolutely. And
engaged.
that's what
Mhm.
we'll have, is we have that option for you there, so.
That's good to know. Like, do you have
Absolutely.
that anywhere? Like, any information about it? Like, we need to execute on something like that. Like, what would it?
Well, again,
It's
you know,
calling me. It's calling me myself like, hey, I don't really know what's happening, but can you call and engage? And basically, I'm just going to vet them,
Yeah.
you know, more fully on the financials.
And even us, look, part of
Because
our,
we can
our,
help just by opening a depository relationship, which once we have that, then like I said, it opens them up to a whole lot of other products and things and options and
But they can
ways in
see
which
what's
we
happening.
can help them.
history with the bank with us really does matter.
It does
It
matter.
really does matter.
Yeah.
And there are many of those examples. But when I was in that time, to kind of what Cheryl's saying here, we can be a call for you too.
Yeah.
So we'll get them. Kelly and I have really good communication. If I know she's in the meeting, I'll get someone to help them.
Absolutely.
And that doesn't mean we're not gonna get ultimately to Kelly, but sometimes the customer needs to know, is there lunch break? Or, you know, it's just a hot time, and I really gotta get an answer. We gotta get someone to help me with that.
Yeah.
So we can be a source for you too. For me personally, I essentially match make for our partners in Houston, right? Cheryl
Well,
will be
and
more.
that's it. I mean, I will turn it over immediately to Kelly on the residential side, but in the meantime, I can have a conversation
We can talk to
and
some of
get
those
basic
guys.
information from the customer. And if it's a pre-approval you're needing, if you call me and tell me that this is urgent,
Mhm.
which I'm sure they all are.
And we're
But
used to that.
then I
Sometimes,
can
We'll get somebody else if I can't do it, but I will always be able to do it.
And a lot of times it's just
Exactly.
taking that message for Kelly. Okay, they're good. We got it. They talk to the person, not a machine, not an email. We got the information. Kelly can act on it without even having to talk on it. She kept moving with the file.
So I'm curious. So, okay, so you're Westheimer, you're Woodlands, you're commercial, you're residential, you're commercial.
Commercial primary,
All right.
not in mortgage.
But how does the team work then? It seems random.
And what, be a little more specific.
You know, some, like, if y'all were all in the same building, like, oh, okay. I
It's
see how that is.
intentional. It's very
Very
intentional
intentional.
with regards to Jose and myself.
Okay.
Yeah, so it's always
Oh,
going to
the
be, we're in
collaboration.
the bank. I mean, there's always going to be a lender. There's a lender in my branch
Mm-hmm.
in the Woodlands. There is, you're the lender for, I don't even know if you're the lender for Jose, correct? Because Jose, you have other lenders,
She has her own,
correct?
her own portfolio, her own
So
office, yeah.
this is an intentional collaboration here.
That's what I was curious about.
And bottom line, look, Mike, that's a really good question. And that's one of the questions I'm asking there is what do you expect? Look, Kelly said it, and you said it. Everybody wants to have this successful, from the client, from your perspective, from our perspective. So we understand communication is key.
Yeah.
Look, I'm gonna put Kelly on the spot. I'll text Kelly if I didn't get an answer fast enough because the customer's calling me. And a lot of times they know me, they don't know Kelly yet.
Right.
So, and they trust me. I'm good with that.
Yeah.
But I'm doing what you expect me to do,
Absolutely.
getting that answer. And I think you need to hear that.
Yeah. No, I think
I'm
that's good.
doing what you expect us to do. It's getting you that information as quickly as possible because they're calling you too.
Right.
If not more than us.
Yeah.
So I get that. So we got to respond quickly. But to highlight Kelly specifically here, she's responsive. And she sets expectations that's appropriate. Right? We're not going to overpromise and underdeliver. So we get that. We've
Yeah.
seen that.
And that's why it's intentional. He thinks like I do, right? So that really is, it really is an intentional collaboration.
And we work really hard with an organization to be that way. Are we perfect? No. Can we always do better? Absolutely.
Yeah.
And we try to learn from those mistakes. But I think we got some really good partners here in Houston specifically. I'm going to highlight Houston. While we're in Dallas and San Antonio and Oklahoma, the rest of Texas, Houston, that's where we are. So we are very intentional in wanting to have success here. We need you and we want to deliver
We
for
need
you.
each other.
You
Absolutely.
guys are listing or buyers or both? Your realtors, they do both, right?
Both.
Okay.
Do you have a specific title company that you primarily use through Shu? Who are your partners?
So we have relations with Capital Title. Natasha,
We love Capital Title.
Yeah.
Mhm.
Natasha, not Livingston, Langston. It's her last name. I always get that.
Those two confused?
White Star, Kip Edwards with White,
Skyline.
Skyline Title, yeah. Skyline Title.
Okay.
No, I've never heard of them.
E.L. Crane. think
I know
he's
E.L.
over title
E.L.
now.
Crane,
Yeah.
mhm.
But yeah, so those are kind of our partners. I think as a brokerage firm though, it's really about getting the volume back up. Volume last year was tough. Again, dealing with those misconceptions in the marketplace. I don't necessarily know if this year's gonna be any better based off of the information that I got going to the Texas Realtors winter meeting. So just kind of bear through that, and when the customer gets more comfortable really re-engaging back into the marketplace, then we're all gonna be able to appreciate that. Yeah.
Who are your favorite
Mhm.
lenders? I'm gonna throw you on the spot.
My
Throw
favorite
both of you.
lenders,
Mhm.
I think, how do we, because I don't necessarily work with consumers.
Ah, okay.
You know what I'm saying? So,
Okay.
like, I lean on Margaret and Shay because they're the ones that's really engaging with. Like, how do y'all determine?
I like Apex,
How do you determine who you're gonna go with?
who's fast.
Okay.
There's one of the answers I
Okay.
was looking for.
There you
go.
Thank you.
Mhm.
Thank you, Mike.
I have, since I've been a realtor for like maybe 18, 19 years. So I would have my favorites. And sometimes the clients already come with their own
Mhm.
lenders, but my favorite ones is just communicating. And sometimes I have to match personalities with the
Mhm.
lenders.
Yeah.
It happens. Absolutely.
Yeah, so my favorite ones are the ones who just answer and communicate well.
Gotcha.
Shay, how do you pick your lenders?
I like to start off by knowledge base, really, like depending, like a lot of people that I've been working with, they need the City of Houston programs or the Harris County programs. So I try to go with the ones that I feel that are more knowledgeable in those aspects.
Okay.
And then from there, like she said, it's communication, it's, how they work.
Okay. Fair enough. That's it's just
Those are like really big.
it is huge.
Shay, can I ask, thank you for what you mentioned right now, City of Houston, for example. So for every 10 clients that you get or are approached by, how many of those are looking for situations where they're gonna wanna use those city facilities?
For me, all of them
About
right
10,
now.
yeah.
That's,
I want it.
I need
Yeah.
to
10 out
remember.
of 10.
So
Yeah.
10 out of 10 for you.
Yeah.
So if the lender's not able to
For
work with
me,
those
it's
funds.
8 out of 10.
80%, 100%.
Okay. And we can stack grant programs, just so you know.
Right.
Okay, so that somebody asked about that. I guess they didn't think we could. So
But do you guys
Just so you
work
know.
with like down payment assistance?
so we, other than the ones we have in-house at this time, when you say work with, we don't have an affiliation with any of those programs yet. We will just accept if somebody has a grant program, but not yet. That's what our team is kind of working on to see if we can get something where we are, collaborating on that level. At this time, we will just accept if they've got something.
But we need to hear that from you. So that's what
What do you
really.
mean accept what they?
So some lenders, you can't stack programs
Mhm.
within their portfolio.
Okay.
Okay, so but we can, and we also have secondary market, and they will always, be able to stack. So I just wanted to clarify in case there was any question that we
Now, when
can
you
stack
say
for grant
stack,
programs.
So, from my understanding, if the money comes out of the same pool of funds, you can't stack it.
When you say same pool of funds, you mean they got two grants?
Mhm.
So, say you got Harris County, you got the city of Houston.
Yeah, you can't do both.
Okay.
No, I don't think, no. When I say stack, I mean like, for example, my FHA down payment within Reach program, plus using the grant programs from something
City
else that they got, yeah.
Okay.
Or my power purchase program, and they could stack your grant on top of that one. Whatever the,
Because yours are in-house.
Right.
yes,
Yeah, so like,
correct.
because there are other, so the ones that we're kind of from, like Seth and T-Shack, and like you
Mhm.
can't stack them because the money's coming from the
Right,
same place.
right.
But you could take one of those programs with you all's
Yes.
program and stack it.
Mhm.
All right, gotcha.
Oh, y'all can do that.
So, and we do T-Shack and Seth, yeah.
Okay, cool.
I have not done those yet. I haven't had any success because the borrower didn't qualify for whatever reason, but we do that.
But
We do
have you
handle
done-
those in-house.
Have you done one with the city of Houston?
I have not.
You haven't done one of those, or Harris County?
I have not.
Yeah.
Because we're not working.
Because, yeah, I think we would if we were
So, do
certified.
you guys require the homebuyer class to get?
For our programs,
Yeah.
there's one program where it is required and the other is not. So it
But it's
depends on
highly
which
encouraged.
program it is. I always highly encourage
Highly
it because it's free, right? But how many people actually do it? Unless it's required.
Well, not all of them. Some
So,
are like HBREA, ours is free, but most of them they charge for that class.
I thought there was one that was online, where it's always free. I could be wrong about
It just
that.
depends on the organization.
Certification.
But
When you
that's
do
through
it on.
HBREA.
Ms. Gail says she does it for people to in her room.
Yeah, and I think, but that's what I'm saying, HBREA falls under that
Oh, that-
NID
oh.
national thing.
Mm.
Oh, okay. Hello.
And I do wish I had more information on that, the down payment programs. I continue to just want to know what's out there because I don't really have an awareness of what's out there, right? And I think that would be helpful to us, even if we could just guide people to this. So that program that you were talking about, Fifth Ward, they do have a lot of information about that. So that's another way that I'm telling people, hey, if you want to know about program, call them, get with them.
We'll typically we partner pretty much with all of the local HUD counseling agencies in Houston. I think the only one we haven't formally partnered with is Urbanly by itself, but indirectly, like the Chinese Community Center, for example, they are part of it. So we basically, hey, here's a list from the HUD side. Most of them know us too. Make sure this is an opportunity for you. Can I follow up though with yours or say, you don't have to tell me names, but this is again helping us take information back.
Mhm.
For those city programs or the county programs, of the lenders that do accept it, are the majority of them local banks or mortgage lenders?
No, they're local banks. We have US Bank. Well, Apex is they're a broker,
They're
right?
brokers.
Yeah,
They're a broker.
so if they have one of those programs, I usually don't go to them. I would
Oh, you
always
don't?
go to
US
US Bank,
Oh, really?
yeah. Cause they're
That's a
local and
big
they
one,
know it.
okay.
They
Okay.
Okay.
Y'all know Shirley.
Yeah.
Yep,
Yeah.
mhm. So that's who you're using for your, okay,
For that.
that's
So
good to
they
know.
kind of position themselves.
People
in that
ask
space.
me all the time, y'all, and I love to be able to say, if I can't do it, let me get you to somebody who
Exactly.
can, and I don't have enough information for that. That's good to know.
Energy does it too.
I don't like
Who?
Energy's customer service.
Is that was it one person?
It's always one.
No names here, but what about, so like, what's like,
But they
Margaret
do
mentioned,
it.
quick response. What's the big stickler for you, Michael? You said
Uh,
service, but what specifically is like your top button, like,
Me? I think,
I mean, I think for me, it's really just all of it. Like you're a professional, so you need to be professional when you're engaging. Because I'm a professional, and you know I'm very intentional about that. So returning phone calls in a timely fashion, answering the questions, being patient with the needs and the demands. Like I expect that from, but I get it that. I had to mature to that. I had to evolve as a business person to get there. So there's some grace that I provide. So I do give second chances, but at
understood?
some point, I ain't giving you no more chances. But so with me, it was a repeat offender as it relates to them. So when you become a repeater, even to the point to where, like, all right, I'm
It's
not
not a
going to use
one-off.
you. Like, I'm not going to use you, but I'm not going to say for anybody else not to use. Like, if I say nah, don't use them. then you
It's a
really
serious
didn't do it
problem.
any time. Yeah.
But the big thing is that your clients, you're brokering.
Right.
So, you know, we want your business, but we are a reflection of you.
Absolutely.
Mhm.
And so the
Vice
moment
versa.
you turn your customer over to us, whatever we
Mhm.
do and however we perform is a direct reflection upon you. That's why that trying to say yes instead of no
Mhm.
is a big deal.
And
And to be upfront
Mhm.
and be able to say, okay, well, we aren't doing the city bond programs right
Yeah.
now, but you know, we
No,
pick up
we-
the phone
we
and call
really
back to you
appreciate
and do this.
Yeah,
that.
because what happens, let me tell you, what happens is that when the customer comes back,
Mhm.
now we have to explain to them why you didn't perform. And it's like, so now I got one more thing that I gotta deal with
Right.
because you didn't take care, you didn't do your part.
Yeah.
Like you do your part and then we together move the person forward. But now you're taking me further back because now I gotta clean up
Yeah.
the
Mhm.
stuff that you didn't. So then I start telling people, so
Yeah, so for me, with my thing, because the majority of the clients that I do work with are the, they need down payment assistance. I don't like the fact that I understand you guys are loan officers, you do this every day. Don't talk to my client like they do it every day.
yeah,
Talk to them like they're
that's a good one too.
Yeah, that is good, 'cause you start talking
Yeah.
big words
Yeah.
and well, I don't tell me. Yeah, I know about acronyms.
Yeah.
they didn't have
Acronyms,
those.
yeah.
And I think that kind of goes
what
into
all that is.
my conversation about being a professional, right? Because
Yeah.
then, even if I'm on there with you, then I start sensing that you're getting frustrated, like they're bothering you. It's like, come on, man.
And we all have to work on that, right? Because sometimes we're just having that kind of a day, right? And but we have to check ourselves and make sure that before we speak with a customer, that all that is put aside. I've been guilty, right? And I'm like, oh, let me check myself for a minute here,
Yeah, we
right? It's not their fault that they don't know the answer
right.
to something that we take for granted. Like, what do you mean you don't know what a mortgage is?
Yeah,
But you know what? That's a fact. People don't know what a mortgage is,
because for
right?
us,
So
and I know Shay and Margaret, like you don't even know what we had to go through to convince them to get on the mortgage.
To fill out your
Yeah,
application.
like we had to do all that to get them there, and then no, come
And then
on.
your services, ooh.
Yeah.
Well, I'm
That
gonna leave you with this
stinks.
last invitation
That
for the
stinks.
team. When you're so Kelly has volunteered every time we present to somebody. She'll add you to her newsletter list or her update list, if you will, that she sends out. I call it her newsletter. But if you allow her some time one-on-one, get to the underlying questions. I think for me, that's the biggest takeaway. When I started being part of outreach 8 years ago, I didn't realize how important that piece was. Because if you tell me, if you happen to know that this is my client situation, give me how is this going to fit or not,
mhm.
right? It's about time too, and respecting everybody's time,
Right.
right? If my credit score is minimum this, and you know for a fact, because they showed you the report, is this,
Yeah. Mhm.
right? It's better to
Nip it
know
in
that
the bud and
That's
let's.
not discouraged. I'm trying to help.
Mhm.
Yeah.
We help each other that way because your client's gonna appreciate that. But more importantly, we want to keep you updated on where we're at. Like, cause things change for us.
And many
So-
lenders will just say, just get me the application and we'll work it out. Sometimes I don't necessarily want to put you through that, not to discourage you, but because why take a credit pull, an additional credit pull when you're already on the cusp
That's a big thing.
of your credit? If we know that, right? So it's just again, education and being honest with your borrower about that. And the rush job is we'll just complete the application, we'll pull your credit, figure it out. Ultimately, that's what we want. But if it's not the right time, it's not the right time. That's just an example of, I think,
Yeah.
speaking to what you're saying. Look, this is this deal. What do you think? Well,
No,
these
just
are my
encourage
thoughts.
That
the
is,
client.
well, just tell us what their deal is up
Yeah,
front.
that's
He
what
didn't
I'm
want to be called. He works all night long. He didn't, don't call him before 10 o'clock in the morning. And
Yeah. Being
all the
respectful of
above.
everybody's
So
situation.
let me shoot a question at you. Bare minimum. I don't know what the client's credit score was, but she did get a pre-approval for. This is what confuses me. The top number says 150,000,
Okay.
and then the number right under it, I think it says actual amount was
Loan
90
amount.
Loan
Mhm,
amount 99,000.
mhm.
So what does the client go off of?
So the 150 was the sales price, likely, of the
okay,
house.
okay.
And the 90,000 was whatever the down payment was, whether it was a 5%, 10%, whatever, that was the actual loan amount that she's going to finance with the bank.
Okay.
So now if she wanted to look at a $200,000 house, then that would need to be updated, right? And then again, I don't know what her down payment, if that was the set amount that she told you, or if that was based
That's
on
why I don't
3.5% or
understand.
5%. So
I
it
don't
should tell you on the letter whether it was a conventional
those
or
questions-
FHA.
You can ask us and we'll
Mhm.
work with you and, okay, hey, I'm gonna share this with the customer.
Okay. And is
But
it-
that's the difference in those two numbers.
Is it normal to immediately go for the conventional loan?
Nope. Depends. Now, if somebody tells me already that their credit score is well, our overlay for FHA is 640, but I know that FHA can go lower with other lenders. But for example, if somebody tells me that they are 620, I'm immediately going to go for conventional because I can't do FHA on 620.
Mm.
You have a conventional
Right.
product at 620 though?
Conventional, a secondary market, conventional.
What was the down payment?
Either 5, 10, 15%. Yeah, it's the same, 5%. But yeah, conventional is 620 for us. But like our overlay for, like I said, FHA is 640, and most people are what, 600 or 620 for
Well,
FHA?
but then that 640 number is a safe number, because especially if those
Very.
customers are wanting to use down payment assistance, those are typically the.
Gotcha. I will typically give them both figures just to see the difference of the two, but typically FHA is going to have the lower MIP, but it's a lifetime. That's what I don't like about it. So I'm going to have that conversation with them too. Okay, yes, it's a lower down payment, but just understand this isn't going to go away until you refinance. So as long as you're okay with that, great. Again, that's just part of the conversation. Maybe the PMI, if they go conventional, is $300. Well, then the choice is obvious, right? So, yeah, I like to present both options though. No, not automatic. Not automatic.
do you have a lot of VA? Do you have run across VA? You done any VA?
We do not do the VA, what's the other one? Land board? Somebody asked me about that, Texas Land Board, but we do regular VA.
Not very many people use the land board.
I used to get I haven't gotten them lately, but I used to get a lot of questions on it. But we never did them, so. I don't get too many questions on VA these days, but I think it's just probably due to where I am located.
You lease the land.
Leasehold?
The trust, is that what you're talking about, the land
Piece of
trust?
land trust?
That's what.
Is that what it's called? VA Land Trust?
No,
Well, it's
No, it's
The
something
land-
that's related to VA that somebody, and I think it was VA Land Board.
because the
Raw
land-
land through the land board,
The
isn't it?
land board the
Is
land
the-
board is a state benefit
Mm-hmm.
for veterans. So I don't
Isn't
see,
it when they buy state,
they can buy houses too though.
yeah,
Like any-
well,
any
the
real
VA
estate.
no down, yeah.
Any, Well, I'm just saying, so that one, that's a state benefit that is renewable, like the federal benefit, they use it one time.
Okay.
This one is, they can use it and then use it again, and use it again. So it's surprising where y'all
Yeah.
would accept that. Like, cause it's just more of I don't even know if it really even impacts the lending process.
Then I might be misspeaking on that because I thought that's what it was called, but I could be
Veterans
mistaken.
Land Board,
It's not the land board. There's another one with land though.
veterans?
Yeah.
And I can't think of the
Because
name.
the guy who tried to get the house, he wanted to try the land instead. I was like, your situation's not gonna work anyway, but.
But if that does
But I don't
make-
get too
what you're
many, but if
saying
that
makes
comes up-
sense, though, because you can have I mean, the veteran can use it again and again and again.
Right. I don't know. I actually got certified in that program, but it was so many years ago.
Yeah.
Yeah, I don't get too many questions on that, but we do that. Regular VA. We do that.
No other questions
Like
I can
it,
answer
they
for
get
you?
to use it again.
Thank you
No,
so
that's it, man.
much.
I really appreciate.
Thank you, thank you.
Appreciate your time. Can I get your information? I have that.
Absolutely.
Can I get the emails of the individuals that were on the call so I can send them my just my updates? I don't really have a newsletter because I think people find those things go in the trash. I only send it maybe once every other month for updates only.
And
So-
here's some cards too. You know,
I am-
pass that around here.
I know what y'all gonna do with my cards, so I'm not even gonna leave you one. I might. Yeah, just that way they'll have contact information forever, and I don't have to worry about y'all having to look for my card. Oh, I got some money. I love it when that happens.
All right, thank you all for joining. We will be closing out this session. Y'all have a great rest of y'all's day. Bye-bye.